Steve, I want to ask you about tariffs, costs, and prices. So a lot of the apparel that's coming into the United States is now subject to that 15% tariff that went into effect last September. That is going to be cut back down to 7.5%, but not what it used to be. So where are those costs showing up? I mean, we have pointed out over and over, Trump is wrong when he says the Chinese are paying the tariffs. American importers and U.S. businesses are paying the tariffs. Who's bearing that cost? Is it getting passed on to consumers at all? Because a lot of people are saying, well, I know these tariffs are in place, but inflation is low. It's not, costs aren't going up at the store. So who is bearing those costs?
Well, it depends on how long the tariffs have been in place. So those products for where the tariffs have been in place for 14, 15 months. So handbags, backpacks, we're already seeing price increases. They're up about 7.5%. Those have been in place since September of 2018, first at 10% and now at 25%. And what a lot of people don't realize is the tariffs are at 25% for those products, your hats, your bags, your gloves. The phase one deal doesn't do anything to those tariffs. Those are in place. They're going to be there for a while. The products that go from 15% to 7.5%, that's 93% of apparel, 53% of footwear. Those products, you're going to eventually begin to see those prices make their way through the supply chain.
What's the lag? A year or so?
Well, as I was saying before, the lag can be 7 months, longer, it could even be shorter.
Well, and in all cases, though, are your customers passing on those increases, or are they eating the increases?
People are doing a lot of things to try and mitigate tariffs. Nobody wants to pass their cost increases on as prices because you want to stay competitive. At the same time, you don't want to accept the cost increases that are being passed on from the person below you in the supply chain. So everyone's trying to figure out what's the best way to mitigate it. But over the long term, the tariffs make their way into the prices. We know that because the tariffs that were imposed on us in 1930 and are still with us, those are now baked into all the products, all the clothes and shoes that I see here. All of those products, when you bought them, the tariffs are built into those prices.
So we are now seeing tariff-based price increases on these products. This will show up in data?
Yeah, we're seeing it already, and you'll begin to see it as the good news is we have a little bit more predictability. The bad news is that predictability involves tariffs, which then means prices.
One of the concerns that we've seen from a lot of retailers is those narrowing profit margins. And certainly when we look at the global economy, one of our concerns for 2021 is those profit margins continue to decline, and that may be the thing that precipitates the end of this cycle. So those tariffs, if eventually they do, they're not passed on to consumers, how do you see that evolving for retailers in general?
Well, it's a challenge. I mean, companies are going to do what they can to mitigate the cost, so they move to other countries, which is one of the things that you do. In the case of backpacks and travel goods, companies have moved to other countries where you can get duty-free. So we would have seen an even worse impact on pricing, except companies have been able to take advantage of some duty-free sourcing opportunities. We have those options available for apparel and footwear. They're much more limited, but people are going to be looking at those as well. So that's, again, a very classic mitigation strategy that companies will be taking advantage of.
Can you share with us what the AAFA has heard from the administration as we look at phase two? Hear anything from Mr. Navarro or Lighthizer?
I think they continue to send signals that they would like to do a phase two, that phase two has a lot of very important, very tough topics, and to be prepared for a long negotiation, for a hard negotiation. So probably what you're hearing too.